Hey, Quants. Well, it looks like BTC decided to crap the bed this morning, and not like it hadn't been doing so already. It also did that mostly yesterday. So let's take a look and see how things stand. If we're looking at just the master strategy, we're still setting on a 25% bullish, 75% bearish scale. The last remaining thing to be checked off, which is currently repainting throughout the day and won't be finalized until the candle is closed, is that 200 SMA closing or sloping negatively. And we'll see the color change at that time. When I looked this morning, it looked like it was sloping down already. It looks like we got a little bit of a move up off of the current low for the day on the price. And so I expected the price was actually pulled down far enough to pull that SMA 200 or the 200 SMA down to a bearish posture. And that would basically be 100% bearish on this master trend strategy. So with that said, I would still be expecting, as with all things within the market, for some pullbacks, whether you're calling for down or up. I would expect some moves in the opposite direction. One thing I just want to touch on quickly is I did mention it's quite common to see price after it breaks the 200 to come up and retest. So I was actually expecting it to get a full touch on the 200 EMA there, which it did not get. Not that it has to do what I wanted to do, but it never got that touch. And I also thought it might come up and touch the 200 SMA here. If we go and take a look at what happened in 2021 at the end, one thing about this market is we were much farther away from the 200s once we started losing that posture. Once we got to 200s, we bounced off of them, and then we lost full support of the 200s, and then it almost touched that 200 EMA. Kind of curious if we're going to see something like this also, where the price just trends, just kind of trends sideways a little bit, maybe a little bit more distribution. If we're not going to see any more upside, obviously, if we see some upside, then we'll go back and just say, oh, it was accumulation. But it did eventually come up and touch those 200s. That was after both of them were postured bearishly, and then we just totally tanked after that. So with that said, let's go back to the current market. I was looking for a full touch here. We didn't get that, so I'm curious if we're going to eventually come up and get a full touch on that. We've been going down for quite some time now, since looks like October, just spitballing here, about October 6th. So a couple of things here. If you were to have been exiting the market with some of the things that I had been watching here, I just want to go back and say, oh, when would I have exited things? So one potential point of exit would have been when this parallel channel broke. I didn't personally have a lot of faith in this parallel channel, so that's not something I was trading. But if you're a pattern bro, you might have decided to take some profit at that point in time. Depending on when that happened, I would have said this is the full close below here. So if you're using the bottom, it also did touch the 200. So this is where this would not, it doesn't necessarily work with the strategy, the master strategy, because typically you see a bounce off the 200s, and consequently that is what we saw. But again, going back to just pattern trading, we saw a close below that parallel channel here. So you would have been getting out at about 108,000. If you didn't trade that, or you were watching the broadening channel instead, there's a couple of points. I did have this one, which I don't think is as strong, but it had a few touches here. Obviously, there was some action outside of there, and that's why I don't think it's quite as valid. But if you were going to be using that, arguably your point to get out would have been either at 106 here, or the second time it broke, which you would have been way down here on the close, would have been 101. And then the final one, broadening wedge here, is this. You got the close down here, which was again at 101. So potentially some confluence there if you wanted to do that. Now I'm going to go ahead and hide these patterns. Where are those patterns? Current patterns. So I'm going to go ahead and hide that, and then I want to zoom out a little bit and look at the parabolas. So I put out a video a little while ago where I said, oh, I fixed it and I redrew the parabola. And at the same time, I also mentioned that this is why it can be a little bit complicated to trade trade parabolas, especially if you have some touches and then it gets broken at the top. Does that mean that it just gets pushed out farther, or did it actually break, right? So it depends on your level of conviction with parabolas, which personally I didn't have a lot. That last parabola that I drew, I did have a fair amount of conviction in that one, I would say, simply because it did have a significant number of touch points, and it did just fit the trend a little bit better. So if I'm looking at the, let me expand these a little bit. So if I would, the first one that I drew, this one broke way back over here. And so again, if you would have been trading that one, you would have got out at 101. We have like 3 points where we would have got out at 101 here, doing some pattern trading. So that's interesting just to note. Again, if you would have just redrawn it, or if you had originally drawn it the way that I drew it the second time, then you're not out until potentially the end of today. And it looks like you're going to be out, if price were to close right now, you'd be out at 95. So we'll see what happens with price action there. So those are the parabolas. Let's see what else we have here. So then if we go to just using the master strategy, so if you're trading the 821s, which in my opinion would not have been a bad idea if you're kind of marrying time together along with the trend strategy itself, following the 4-year cycle, we would be expecting that potentially we're coming close to an end here, since we are currently in Q4, even though we didn't get all the excitement that everybody was hoping for. Time-wise, we're about there, right? So with that said, it might not have been a bad idea to go ahead and start using the faster 821 EMAs. And so that cross would have happened here. That would have been a very generous candle, since it was on an up candle and it was an indecision candle. And so here, using the close there, you would have been out at 115. So that by far would have been the best price. Now, this is not a solicitation to use this strategy. Obviously, you should go ahead and test it yourself if this is something that you would like to use or something you're just interested or curious about. Just a note, that would have been the best point right now. Of course, I wouldn't have always followed that throughout the whole uptrend since 2022, because as I mentioned before, you can get chopped up just coming in and out on the 821. So just marrying that with time, it might not have been a bad idea to use the most recent ones to exit. Having said that, you might have, then which one do you choose, right? August, I probably would have said was a little bit too soon. September, also, you maybe would have used that one. If you would have used that one, you would have been out on closing price here, would have been down around 109. Still better than where we're at now. But time-wise, I personally did still expect we'd have some more upside. And so just going to go back to the 115. That's the one I'm going to use, sticking to it. The next potential area where you could have got out was in the cross here. This isn't the way that I would play this strategy, and I haven't validated this, but I'm just pointing it out as an option that you could have used. So on this cross here, you would have been out at 107. And so with 107, still better than we're at now. And then the final one would have been the trend change. And so which trend change? You could, so I'm just going to make it simple. The trend change occurs when both of them are sloped down, which has not happened yet. So as I mentioned, when the price was a little bit lower today, it did look like the trend was changed. So I'm just going to say, similar to this potential parabola break, if the trend, if it does drop down in price a little bit more, well, let's just go ahead and make it simplistic and call the bottom of this one, right? So just so we're not cherry picking too much here, we're just speculating as it is anyway. So 94,666, sign of the beast. So yeah, that would have been another area to get out there. So, so we got the potential exits on the master strategy, potential exits if you're using the pattern strategy, and then also on the parabola break. just noting how difficult it can be to use those parabolas. But there's a number of areas there that say, hey, might be time to start exiting some positions. Also considering the 4-year cycle, we might be close to the end. I know everybody wants to see that, including myself, wants to see that really euphoric pump at the end. Gets help Santa come along and fill our bags. The government shutdown ended, right? We're still expecting, although it looks like the statistics are changing a little bit now, there's the potential for a rate cut in early December and quantitative easing starting in December. There's just a ton of bullish factors. And all I can say to that is it doesn't look like we're climbing a wall of worry here, right? It looks like the exact opposite. We have a whole bunch of positive factors on the horizon, and price still seems to be grinding down. I don't know if that's manipulation, but it doesn't feel good when that's happening. So let's talk about, just to wrap this up, let's talk about the potential for if we could or might see the price bounce. As I mentioned, we have been going down for quite some time now. Price isn't going to go down forever. We're going to see some upward motion, some upward momentum, if nothing else, for a short term. And let's see if we can come up with some speculative ideas on when that might occur. So I just wanted to point out, we did see some fairly significant downwards movements during the bull run, even when we weren't even close to time, right? So, I mean, so beginning of 2020, actually, I do want to show some, we'll go to the seasonals at the end here, but 2025 was a largely down year for the first portion of the year. And then right here towards, since October, pretty much Q4 here, we've been down. And so I would expect some upward relief. So if I was going to project something, there's a couple things that I would use if I'm just doing some analysis here. One of those is the VPVR. And so we see a lot. What happened to my chart there? There we go. So we see a bit of a volume node. I'm going to hide that and make it look the way that I want it to look. Point is, there's a volume node there. There's a better looking volume node there. Obviously, you can zoom out, and you saw the volume node was a little bit less obvious there. So make sure you use this or put this on and test it out yourself to see if you want to use this for analysis. But using this, then you would also likely expect some resistance on these higher volume nodes as well, right? So all that said, it looks like there's a pretty high volume node here. So potentially looking for a little bit of relief there. Going back to the master strategy, I mentioned in the previous video that there was a potential for bullish divergence to play out, and this is one of the reasons bullish divergence does not really work that well in algorithmic trading. You see that the bullish divergence did print, and it printed exactly where you would a little late, I would say, but it did get printed, and the problem with that is it didn't print until today. Well, knowing that bullish divergence printed 5 days in the past, that's the setting that I have on there, is not going to be very helpful. Unfortunately, you can't say you only need 1 day for confirmation. Otherwise, everything's going to show up as bullish or bearish divergence, some type of divergence. And so the default settings was 5. I just left it at that. And point about that is like today, it says, oh, this is bullish divergence back here. Well, you can't go back in time and buy then, right? So that is a little bit unfortunate with divergences. I do personally like to use divergences if I'm doing discretionary trading, and I personally tend to front run them if I expect price action to move in the direction that I want it to move, and it looks like there's a setup for bullish divergence. The short summary of that is I don't generally wait for confirmation on bullish divergence from an indicator before I play bullish divergence. And so with that said, we still have the potential for bullish divergence to set up 3 drives of bullish divergence actually on this Stokes here, on the stochastic. And so if price does turn around and trend up, then we're going to have a little bit of a bump down here, and this is going to be higher than this one. Price here is lower than price here, and that would set up 3 drives of bullish divergence. So that would be when I'd be looking obviously for some relief. So looking at the VPVR and the potential for one indicator, it's only one indicator, to show the potential for 3 drives of bullish divergence. I am expecting some upward price action relatively soon. What you do with that obviously is up to you, considering we're looking at 75% bearish here. It's up to you if you want to take action on that to lighten your portfolio if you haven't already, or if you're going to potentially try to take a scalp play and maybe get up to these 200s. If we do break past this last swing high here, I would expect to at least get to the 200s here. That's not a lot of price action from here to here, but it's it's there nonetheless. We still have the year's not out yet, so we'll see how things develop. That's what I have today. Oh, I did mention I wanted to go into the seasonals. So let's take a real quick look at the seasonals. And this is just going to be real quick. The only thing that I really wanted to say about the seasonals is I wanted to click on the table here. I wanted to get all the data that this chart has. Consequently, I did switch over to the index chart, but it still looks like it's only giving me data. Oh, it is giving me, okay, so it is giving me data all the way back to 2009. Good, because the Bitstamp chart, which I had been using, is only giving me data to 2014. And so the only thing that I wanted to point out there is that you see this kind of pattern: red, green, 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 red, green, 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 red, green, green, green. That's a question. Obviously, where this whole year has basically been a wash. I'm curious to see how this is going to play out in the context of the 4-year cycle. It could end green. I mean, if we end green or basic like with 2%, I mean, that's basically flat, right? I've heard a lot of people talking about this, and I would tend to agree. I don't expect to see as significant of a bear market as we have had in the past. But if our last year, Q4, is going to end up being just, not Q4, but the last year of this 4-year cycle is so flat, it really makes me wonder how far low we're going to go. I don't really have anything else to say about that. I'm just pondering here. So I'll leave it at that. Hope you all are having a good day, and peace out, quants.